If you want to scale a multifamily portfolio, you have to understand how to put together the capital stack. And the hardest part for most people is raising capital or raising equity. Well, today's guest raised $1 million from one investor on his first deal. But when he went to replicate that, he found out it was a little more challenging than he initially anticipated. Learn how today's guest overcame these challenges by creating systems and processes and also having a very clear vision of how he was going to scale. Today, we sit down with Ben Michael, based out of the Twin Cities, and he shares how he transitioned from being a broker to a multifamily investor, raising capital for his deals, where now he has a portfolio worth over $25 million. Check it out right here. It's today's conversation on Multifamily Insights. When you think you found a great deal, asking the right questions could be the difference in finding a stud or a dud. Listen, we've put together a new guide to help you out. It's called 7 Questions You Must Ask Before Investing in Apartments. Now, in this guide, you're going to learn how to uncover red flags, quickly identify underwriting risk, vet sponsors and team members, and confirm key assumptions. Now, this is a guide that's going to help you be a better investor, whether you're an active investor or you're a passive investor looking to partner with other operators. Asking better questions is the key to identifying great opportunities. So download this free guide. Go to our website, casmoncapital.com/7 questions. That's the number 7 questions. And you can access this free guide today. To make it easy on you, though, we've put a link in our show notes. So you go to the show notes, you can click that link and access the guide right now. This guide's going to help you make better investment choices, asking the right questions to build your portfolio. So be sure to download it today. Ben Michael is the founder and principal of Ridgeview Property Group, a real estate investment firm focused on value-add multifamily properties in the Twin Cities. Now, today, they currently manage about $25 million in assets. Let's welcome to the show, Ben Michael.
John, thanks for having me today. I really appreciate it.
Yeah, Ben, great to have you on. Listen, I went over your bio and your background at a very, very high level. Why don't you take 2 minutes and fill in some of those gaps?
You got it. So I started out my career as a multifamily broker. I graduated in 2010, started pounding the phones and cold calling, and started my brokerage career. I did that for 10 years. And then during COVID, I kind of had the itch to go a little, get into investing, start maybe make a transition. And so in the middle of COVID, what ended up happening for me was I tried to list a building that I really liked, tried to list it in the middle of COVID, couldn't get it sold. We canceled the listing agreement. And then 6 months later, I got back to the seller. But this time I said, hey, I want to buy the building versus broker it. Are you still a seller? They said yes. And I had an investor lined up. We went and bought the building for the exact price that I was trying to get them 6 or 8 months ago. And we got the deal done. And from there on, I switched and stopped brokering and went right into investing. So since then, I've done 3 more deals. Like you said, we're at $25 million total value right now. My niche as of late has been properties that would be considered value add, need some updating. I go in with bank debt, with construction bank debt. So we go in, we're doing a heavy lift. We're using construction debt with construction draws to fund the deal, and that's kind of how I've created an edge in my location. Just maybe looking at hairier deals than most other buyers. So yeah, that's a
Yeah,
little bit about me.
Ben, I love it, man. You mentioned a couple things that stand out. So one, back in 2010, coming out of school, you started off as a broker, focused on multifamily, did that for a decade before COVID hit, and you had a property that you were trying to list, couldn't find a buyer, came back 6 months later, said, you know what, I really like this property. What if I bought it at the same price? Had an investor lined up, took down that deal, and you were kind of off to the running when it comes to being a multifamily investor. I've got a few questions on that because I think this is a great transition. And obviously, COVID was a great reset for many investors and many folks because it forced all of us to take a look at what we were doing, where we were going, and how we wanted to live our lives. And one of the things for you was, you know what, do I really want to stay a broker or do I want to be an investor? You mentioned on that deal, you couldn't find an investor or a buyer for that property, but you had an investor lined up. Can you talk to me more about how you were able to get that investor on board with this deal, particularly since you didn't have that experience as an operator.
Absolutely. So what what I didn't know during my brokerage career was that I was gaining experience that future investors would draw from and would build them confidence. So I approached this investor and I told him, I've got a great deal. It's uh, let's go look at it. I've underwritten, hundreds of deals in the past, so I can sniff them out, and he really trusted my background experience. So that's kind of, I didn't know that would be what I would draw on, but from then on, as I raise money, I'm always going back to the 10 years as a broker, watching some operators grow and where they built their portfolio, watching some operators flounder and what went wrong over there.
Yep.
So I didn't realize it, but I was gaining experience. So with this investor, I think he probably maybe had someone else underwrite the deal, that I don't know. I think he was vetting me really,
Yeah.
really, finely, but it was a deal that kind of sold itself. It was a great deal. It underwrote really well. And so, yeah, it just, I started off with that brokerage background. And then now, 5 years later, I'm more just going off of my previous deals when I talk to
Yep.
investors. But yeah, that's how I got that first one done.
Talking about the relationship with that investor, right? Because it sounds like you had this person in mind when you came across this deal. So, how did you develop and establish the relationship? How did you know this guy was the guy? Talk to us more about just kind of those steps.
Sure. So he was a family friend. And when COVID hit, I think I had three brokerage deals in the mix. And every single one of them, the buyer canceled. The next one, the buyer canceled. The next one, the buyer canceled. So for a lot of people, and for me, it was a time to sit and think because I wasn't making any money. And for me, it really hit me. I want to get into investing, and so I started at that point reaching out, telling people what I'm looking to do, and that's kind of where this meeting came out of the woodwork. Was me a year in advance, I would say, from our big acquisition, was putting word out that I'm looking to buy and I'm looking to get investors to come along.
And when you said reaching out, was that, did you make a list and just start calling people? Did you put, a post on social media? What did that look like?
Yeah, man, I got a lot better at reaching out to potential investors down the road, but early on, I created a newsletter, and I was just so nervous about putting people on my list because I didn't want to bother anybody. So I think I had 50 people, friends and family, added to my newsletter, and I used that to reach out. But 50 people is not enough, and when it time came to, so I ended up finding that one investor. We got that deal done, and I think I was really lucky because I really didn't put in enough legwork to get. He invested over $1 million in that deal, and I really don't think I put in enough legwork uh to you know to have earned that great investor. Luckily, I had a deal, and it's been performing really well. But so then I had this terribly small list on my newsletter. Um, I actually found a deal after we did that first deal. It's a 28 unit townhome complex in the middle of COVID. I found another deal a year later. Now I had my 50-person newsletter, and I was going to blast it out to everybody. I was going to blast the deal on social media, and I mean, the response was really small. All I had was this guy who invested with me before and maybe like two other people. And I had the smallest reach ever. So I had to fight. We had to raise $1 million. I had to fight super hard to complete that raise. I think I had to kick in the last, 10% just because I was out of options. And what I learned from that was if I want to raise money, I got to get a little more bold. I got to start reaching out to more people. And, I went through a lot of pain trying to raise for that second deal and petering out at, I think, well short of my full raise. So what happened next was I was fully committed to just putting myself out there and ensuring that everybody I know, everybody that I have worked with in the past, um, knows what I'm doing, what successes I've had in the past, and that I'm fully teed up for whatever future deal I'm going to work on. So at that point, I just went, I would say I went nuclear. I just took my entire Gmail from my brokerage career and put a couple thousand people on my email list. Um, and, people that I had no business constantly sending newsletters to. And it completely transformed my next raise. I think within a year, I had a $2.2 million raise that went really fast, whereas before that, I could barely raise $1 million. And the difference was just putting myself out there and blasting out content to my network and everybody from my past.
Ben, I love it. You just gave a master class, right, on raising capital. And one, I mean, this business requires a little bit of luck, but persistence too. And there's some great insights I want to make sure we cover. First and foremost, this process for you raising capital started a year before you actually did that big deal, right? You started
Right.
reaching out to people in your network, letting them know, hey, I'm going to be an investor, not just a broker. I've been doing this for a while. I want to transition, kind of understand what it takes to be successful. And about a year later, you find this deal, and that one investor was ready to go and invested $1 million in your first deal. That's incredible, right? Unheard of. So to
Mhm.
land that investor probably gave you a little bit of a false sense of hope and optimism, like, oh, this is easy, right? So you go out there, you crush that deal. The next deal, though, is a little bit harder. So now harder to raise that capital that you needed, I think 2.2 million or something like that. So you're trying to raise that capital a little bit harder. So you learned, hey, you know what? I can't just go off to the handful of people that I know are interested. I've got to really expand my reach. You got a newsletter of 50 people. You grabbed every contact you have, which I don't advise, by the way, but you grabbed every contact, you threw them on this CRM, blasted email to all of those people, and you're able to grow and scale. And I think the key here is if you're going to raise capital, you can't worry about what people are going to think of you. And
Right.
that's a tough lesson. All my clients, they run to the same issue because we all want to be liked, we all want to be loved. We're always, a little self-conscious. We all got a little bit of an ego, and you don't want people to challenge that, to question you, to doubt you, to push back because we've got egos, especially when you haven't done it consistently for a while. When you're new, you got your own, voices in your head that you're fighting and trying to calm down and build up your own confidence. So you don't need the outside noise from other people who are going to tell you, hey, you're going to fail. You don't know what you're doing as well, right? And that's the challenge I think a lot of people face. But until you face that hurdle where you couldn't raise the money, that's when you were able to actually say, you know what, it's not about me. I need to just focus on getting this in front of as many people as possible and growing and scaling. I want to give a quick note, for folks who are struggling with this, one of the things that helps tremendously is surrounding yourself with other people who are raising capital, doing larger deals, going to networking events, joining mastermind communities. If you're interested in that, we've got our Multifamily Insights community as well. We'll put a link to it, but you can go to casmancapital.com. So, oh, you can go to casmancapital.com/mastermind and learn more about it there. But I think it's so important to do that. Now, you had the brokerage background, 10 years of that experience that you could lean on. Did you need any other guidance, assistance, coaching, networking, support to grow and scale as you were making that transition from broker to operator?
100%. So I did that first. So when I turned that one listing into an investment and then I quit brokeraging right there, I actually hired a mentor. So this was a guy um, from a podcast, and I knew he was knowledgeable. I'd listened to him, you know, for hours and hours. I called him. He had talked about coaching, and I signed up. And that was the difference because that first deal I got lucky. It wasn't really didn't need a lot of work, and it didn't need any complicated debt or anything like that. but that's not how I can't get enough cash flow by just finding these softball deals. So I need to, get um get knowledgeable about construction debt. I need to become knowledgeable about repositioning a property, rebranding, how to renovate. You know, I just bought a property recently with 18 vacants, so we just hustle on those. So you need to learn how to renovate a lot of units quickly. Those are all things that there's no way I could have learned just by reading online, reading books. It was all about having a mentor to accelerate my career. So that's exactly what I did is I had a mentor and I credit him with basically allowing me every deal since that first one was because I was using his playbook.
And it's so key, man. And you hear guys say this all the time, but it's true. You've got to align yourself with people playing the game at the level you want to play it at because there's systems and processes. And yes, you can get lucky with that one investor, but that's not a system, right? The
Right.
system is not call John and hopefully John wires $1 million. Like that's not a system or a process. That is not going to lead to continued sustainable success. And the key when it comes to raising capital or even finding deals is to rely on no one, but always someone. And it's weird, but the reality is you need a pipeline. It's a numbers game. You've got to have enough people, enough options coming through where someone's going to do it. Someone's going to bring that deal. Someone's going to fund the investment, but you don't know who because the timing may not be right. And if you only got 50 people and there's only 3 people that will invest, well, if those 3 people have something else going on, you're screwed. It's not a
Right.
business, right? That's hoping somebody writes a check. So again, if you want to really grow and scale a business, you got to have systems and processes. Getting with a coach or a mentor that can give you that guidance is absolutely critical to help you grow and scale. All right. So talk about the business plan because you mentioned that first deal is more of a softball deal, but your focus now is on deals that are a little bit more hairy, using these construction loans, full renovations, and then increasing the value. Again, knowing that you come from the brokerage side, not necessarily the operator or construction side, talk to me about the transition and the things you had to do differently to really build up the aptitude and the ability to execute these deals.
Yeah. Well, every broker, when they're pricing out a property, putting a value on a property, they're considering some great value add
Yep.
program that pushes the rents. And so I knew the playbook from an underwriting standpoint, and I had zero idea what's involved in executing on that value add deal, right? So that's what I had to learn pretty quick because if you're just looking for turnkey properties that are already in good shape, you're gonna have a lot fewer properties to choose from, and you better have a lot lower return standards. So if you want to get realistic and buy the real stuff that's constantly hitting the market, you got to know about branding a property. You need to know about renovating hallways. You know, you need to know. In my case, I leave it all up to a designer to pick colors and pick products because I know that it's if I put some swatches together, the minute I take swatches and then a minute actually I put it on the wall, it's just terrible. So you got to know your field, but you have to understand the process of renovating a property because these 60s and 70s buildings were built by the thousands back in the day, and that's kind of the majority of what hits the market, at least in my market. And so just by necessity, I had to learn how to handle those and how to turn an old classic 1970s 3-story walk up into something that's really attractive.
Let's talk about that more because that was the next question, right? So talk about the market itself, and then I want to get into the asset because you're in the Twin Cities, which I think most people would say is more restrictive when it comes to landlord tenant laws and just the ability to evict and things like that. So it's a little bit harder to do business in. So talk about kind of that and the business plan there. Are you holding these assets long term for cash flow? Are you renovating them and then selling them? What's kind of your exit?
Yeah, here in Minnesota, in the Twin Cities, the way I'm operating is we've got St. Paul. and St. Paul added rent control in 2021. So I'm staying out of there. And then I also stay out of any city that's really bordering St. Paul because I think they have a propensity to maybe take on some of the same rules and regulations. Minneapolis borders St. Paul. Minneapolis is in the same. So there's these urban centers that I'm staying out of right now. And maybe if I get the sense that the government is at the very least maybe stabilizing on the current rules and regulations versus constantly adding more and more, maybe I'll come back to them because they might be a good value play. But my plan and just thinking about the best outcome for my investors is I'm going deep into the suburbs where we've had consistent growth, low crime, and then most importantly, regulations haven't been changing constantly. It's very stable in that regards. So that's my strategy in Minnesota. I did put a lot of thought into breaking out into another market. I really like the story behind Nashville. I really like there's Northwest Arkansas, Bentonville is a really interesting area. It's kind of an oil boom powered by Walmart. So it looks like an oil boom, but it's actually just a Walmart powered boom, economic boom. But I looked really hard into breaking into one of those markets. And then I realized, I've been a broker in this market for so long. I do a lot of off market work. I've got a great network here. I'm just going to double and triple down in my local market and build that way. And so that was my conscious decision. I'm going to maneuver the between the cities that are still landlord friendly, and I'm going to avoid the cities that are not. And it's worked out pretty well, especially in the last couple of years because we've been pretty steady. We still have growing rents. So that's been my strategy.
Ben, I love it. That's a great reminder, right? For someone even like you, you've been in that market for 10 years or more. You've been in the market as a broker, so you have deep relationships, but you even looked at other markets, right? Because there's some complexities to the Twin Cities. You've got rent control in St. Paul. You're avoiding those neighborhoods there. You looked at Nashville. You looked at Bentonville, but ultimately you came back to, you know what? I've got an unfair competitive advantage here at my home market. And that's one of the things we always talk about is make sure you understand the market before you go and look at another market to invest in. If you're going to be the lead operator, it helps to really, really, really lock in on markets where you have a strong network. You have a strong knowledge of what's happening. You know, this street, not that street, this neighborhood, not that neighborhood. You want to have that built in knowledge because that's going to give you the unfair advantage and allow you to come across great opportunities and more importantly to recognize the opportunities where others may not. So I appreciate you sharing that phenomenal insight and something for all of our listeners to keep in mind. I want to go back to the asset itself because you mentioned these were 60s and 70s products, so a little bit of older asset. Are you kind of bringing them up fully to today's standards with the renovation and going through and doing windows and electrical and plumbing and all of that, or are you kind of keeping them more as C class assets?
So my last two deals have been full renos. They were 100% classic. So the most recent deal was a 36 unit and it was half vacant. I bought it
Mm,
last December. So we're going in. Every unit gets. I think our total budget per unit is $18,000. We're doing flooring throughout the whole unit. We do carpet in the bedrooms, but flooring, LVP everywhere else. New cabinets, granite countertops, stainless appliances. We love to, if there's no dishwashers, we throw in dishwashers. If there's no over the range microwaves, we love to throw in those because we want to get some counter space freed up. We're painting the place. We're doing lighting, hardware. So the units are getting a full refresh, and then we give the hallways the same treatment. Make them really nice. Really focus on the leasing office. Make sure that those are top level finishes, really nice furniture. And some people would disagree, but I usually paint every building I buy, and they're all usually brick. I know that's ridiculous, but we're we're trying to get these to. I know the tenants they know that the building is older, but when you walk up to these buildings, they're not that 70s brick look. Or they look better than that. So yeah, I would say typically if you add up the total cost, we're probably looking at 25,000 per unit on these buildings. But we get great rents. Management is a lot easier because you're building, you're in a higher rent, you know, class, so you have better tenants, but you also have, just easier management, easier time leasing because everything's really attractive, and then you've got modern lighting, modern toilets, you know, the things that might have ongoing costs. So your those toilets and the faucets have they reduce your water usage. The LED lights everywhere reduce your electric bills. So in a nutshell, we're going all out on these buildings, and we're trying to set these buildings up for 10 or 20 year ownership, for me and my investors. And so the best way I can think to do that is renovate early on, and then just run them tight for foreseeable future.
Ben, I like what you talked about because you're talking about understanding the business plan. First and foremost, what's the exit? And one of the things we always coach kind of our clients and even our mastermind, when you're buying a property, the first thing you have to start with the end in mind. What are you planning to do? Are you going to look to sell in 3 years, 5 years, 10 years? Is this a long term hold? Because that should dictate what you do, right? If you're going to renovate or how much you're going to spend on renovations, you have to understand this first. We had a call yesterday and I was talking to one of my clients, and she was asking the same question. She had a unit where if she did just painting and floors, she would have had to probably spend about $3,000 or $4,000, but she could bump rents about $300. Versus if she did the full renovation that she was expecting, it would have cost her about $20,000 per unit, but she would have been able to push rents about $600. So we did a whole ROI analysis that came to a conclusion for her, but it starts with what's your end game. If you're looking to sell this thing a year from now or 2 years from now, that's going to take you down one path versus if you plan to hold this thing for the foreseeable future, 10, 15, 20 years, you may have a different approach. So that's a really great insight and great way to think about what you want to do with these properties. In your case, when you're doing that, you're creating the value, you're obviously driving the rents up. What are you seeing as far as kind of the rent premium that you're getting for the new renovated units versus the previously unrenovated units?
Yeah, we're usually seeing $400 to $500 for a rent premium. I'm buying in B plus or A locations, so I'm buying in locations that really respond to these improvements. And so not only are we seeing those higher rents, but we're also turning a building that was it was maybe not it was maybe easy or okay to manage because in a good location, but then just really ugly inside. We're turning it into, in terms of management, they become kind of a softball. So
Yeah.
I can find third party property management for these buildings, and leasing isn't too challenging for them. Handling tenants isn't too challenging. So that's the other part about setting it up for the future is it's hard to find management for a building that hasn't received any love over the past couple of years. They leasing is tough on those managers, maintenance, everything's tough on them. So if you are buying in good locations and your building will respond well economically to the money you're going to put into it, there's a lot of good reasons to do these units up to the tens.
Ben, you just laid out what is, a great strategy, a simple strategy to an extent, hard to execute, right? So some of this stuff is
Yes.
simple but not easy. So what you're talking about is buying C-class properties in A-class neighborhoods. And then you're renovating them, bringing them up to what the residents are looking for. And now it's easier to manage. You can attract quality tenants. You can hold it long term because you know that there's going to be strong demand for that area over the long haul, and you've given them a good product. Not to mention, it's really expensive to build brand new stuff today. So you can have a nice little gap between what your property rents for and that new A class project that comes down, if there is anything that comes down. So that's a great strategy to have in mind. You're not talking about going into D class or C class areas, renovating and trying to, hopefully stand out in a sea of sameness. You're really focusing on great quality neighborhoods. And we started this show as target market insights. And the entire point was to figure out how to find the best places to invest for that very reason. There are areas that are going to be desirable that you can predict, that you are going to understand which ones are going to be great and desirable. And if you understand that, it makes investing so much easier. As a matter of fact, we put together a free guide. It's 35 hacks to find the best markets and submarkets. If you want to check that out, go to our website, casmoncapital.com, and click on the resources tab, and you'll see it in the drop down menu. Ben, great stuff there. For folks that want to learn more about you and what you're doing, what is the best way for them to get in touch?
Sure, you can reach out to me on LinkedIn. So Ben Michael, last name is Michel, and from there you can also find a link to my newsletter as well.
Love it. All right, check them out there. We'll make sure we put a link to that in the show notes as well. It's Ben Michael with no A. So Ben Michael, and we'll link to that there. Right now, we're going to transition to a round of insights. They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmoncapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmoncapital.com and click on the mastermind button today. All right, Ben, give me a failure or an apparent failure that sets you up for later success.
Yeah, I didn't mention this earlier, but I did buy in my brokerage time. I bought a duplex and jumped in, and it was my first foray into any sort of real estate, and it ended up working out okay. But my failure was I had zero guidance, and it was a basket case of a property. I was fully undercapitalized. I was hiring anybody who could fog up a mirror, and so it was a mess. And the failure was just thinking that I could go and do this without guidance, thinking that maybe I picked up enough information along the way to go take down a deal, and there's no sense in that. So next time around, 100%, I would be tracking down whoever could guide me, paying for a mentor if need be. I'm not selling any mentorship on my end or anything like that, but that's exactly what I would do if I were to do it again.
Give me a digital or mobile resource you recommend for our listeners.
To be honest, I've learned a lot on what used to be Twitter and now X.com. I think LinkedIn is the best for networking, but I think for getting in the weeds multifamily content, I've really learned a lot from X.com. So there's just operators out there that are sharing nuggets of wisdom that I probably have 200, 300 bookmarks that I've saved that I go back to, and things that I've learned. So
give me the book you recommended or gifted the most in the last year.
Yeah, so I read the Elon Musk book by Walter Isaacson. This was before there was any political connection, and it blew me away. Just his level of agency, his ability to set kind of unreasonable goals, and then somehow get all his employees and everybody to drive for the mission and succeed in doing completely unreasonable, crazy solutions. So that Elon Musk book was super inspiring to me.
What's a daily habit that helps you stay focused on your goals?
In terms of habits, I think probably what's been biggest for me is visualizing my goals. And it sounds hokey, but once you complete a few goals, you look back and you realize that you could have absolutely been envisioning what it would look like as you're working towards it. And it really makes a big difference for me. I visualized my future office with employees and the decor and the type of portfolio we're operating, because that's my next step. And it absolutely drives me during the day when I visualize and believe where I'm headed next.
Give me your number one insight for scaling a multifamily portfolio.
For scaling a multifamily portfolio, I would say that market cycles are inevitable. And so you if you're going to scale a portfolio over time, and I think a lot of operators learned about this in past years, you need to assume that today's conditions are not going to continue forever. So that means having strong reserves for your property. That means having debt that maybe doesn't all mature at the exact same time or too short of debt maturities. Just assuming that as you invest in this deal, you need to have a game plan if market conditions deteriorate.
I love it. Great stuff. Let's go in a different direction. You're out there in the Twin Cities. Give me your favorite place to grab a bite to eat.
Yeah, my favorite place is a lunch spot called World Street Kitchen. They've got a Korean barbecue short rib bowl that is amazing. So
That sounds
that's my
delicious.
spot.
I love it, man. Let's check that out. Ben, great stuff. Really enjoyed hearing your transition from the broker side to the investor operator side and learning, being humble, going to get that mentor, that coach to help guide you through the process, raising $1 million from that one investor on the first deal, which is incredible, but also having the struggles to recognize, okay, hey, you know what? If I really want to make this a business, I'm going to have to get over myself and I got to put myself out there and I got to do it to more than 50 people. I've got to really expand to my network completely and just put myself out there. And I think this is a great reminder for all of our listeners. There are three C's to raising capital. The first is confidence. Second is credibility. That third one is connections. You got to be connected with people. It can't just be, a couple folks that you grew up with. It's got to be an expanded network. So you talked a lot about that. It's very helpful for all of our listeners. Again, for folks that want to learn more, they can connect with you on LinkedIn. We'll put a link to that in our show notes. I want to thank you again, Ben, for being a great guest and coming on the show today. We look forward to staying in touch with you and hope you have a great one.